Okay, everybody, it is me, Gregory Mannarino. It is Thursday, August 25th, 2022. People, look, I'm going to lay this on the line for you right now. I'm going to tell you what you probably know already, but maybe it will help just to hear it. We are quickly moving into an inflationary depression. An inflationary depression. What do we know is going on? Okay, we are in a cost of living crisis which has no end to it, okay? All the nonsense, all the garbage, all the distractions, and all the propaganda, how the Federal Reserve wants to tackle inflation, it's all fake. How about this? The Federal Reserve for years had a 2% target on inflation. Well, we're at 8.5%. Tell me, why is not the Federal Reserve being held to account here? It's just not going to happen. I'll give you one guess as to why the Federal Reserve is not being held to account. Look, the Federal Reserve, not only are they the government of not just the United States, of the entire world here. Every central bank works in concert along with the Federal Reserve because the United States dollar is and remains the reserve currency. Okay, so that's the way this whole thing is. Central banks here are on a mission to inflate. They're deliberately going out of their way to not only inflate the global debt bubble, but to inflate themselves and create more inflation, along with puppet governments like the current administration here in the United States, Mummy Man, and the rest of the motley crew, who are trying to conjure up every conceivable thing and other things you can't even dream about to continue to pull cash into the now from the future, which is massively inflationary. But you're not allowed to know that. They want you to believe that by the Federal Reserve or other world central banks, nudging the overnight rate, incrementally over a series of months, it's going to drastically reduce inflation. You got to be brain dead to believe that's true. And there's no way to stop what's coming here with regard to a lot more inflation. Let's put that into perspective. Okay, so since the meltdown of 2008, what has been going on? A money creation binge like we've never seen in the history of the world, flooding the world with dollars, effectively dollarizing the world here. So you have all these extra bills, trillions of them existing, whatever form they might be in, physical or digital. Now they're starting to chase the same amount of goods, and you can't stop it. You see, but you're not allowed to know any of this stuff here. You're supposed to think that, everything is just great. The inflationary crisis that we are in right now, which is going to lead to an inflationary depression, is deliberate. There's no way on this earth, off the earth, or anywhere else that central banks, especially the Fed, wasn't well aware of what they were doing, and they missed their inflation target by hundreds and hundreds of percent. And still, like I said in the beginning, no accountability at all here. They're just being praised on the mainstream media outlets because, they've gained credibility. The Federal Reserve has gained credibility because they're trying to combat inflation. I'm telling you, people, you can't make this stuff. Now, it gets even worse than that. So right now is the Jackson Hole, Wyoming meeting, the symposium on economics. Make that up, too. Anyway. So here's the situation here. So Fed President Esther George is warning that unemployment is going to rise. Oh, by the way, we did get the first-time unemployment claims for last week, 243,000. These numbers are fake. All right, I think you know that. Not a single data point is real. So, but the fact of the matter is, we have 50% of employers here in the United States who are saying they're going to be cutting jobs. Okay, so we have an inflationary crisis with no end in sight, okay? A cost of living crisis with no end in sight, and people are losing their jobs. Does that sound like a recession to you or a depression? So we have a depression building up, and we haven't seen anything yet. With soaring inflation, no end in sight, and we haven't seen anything yet. Imagine Greg Mannarino's shock here. You can't possibly believe it. And Powell, the creature, Yellowstone Powell, tomorrow is going to speak, and we'll see what this does or what comes out of its mouth. Its mouth. Anyway, so with that said here, let's throw an eye over at this market. The market is, first of all, it's so detached from reality, people. It makes no sense anymore, and this is just, easy money. Oh, that's not supposed to be pouring into the market. And don't forget, the Fed doesn't buy stocks. No, they have a trading desk, but they don't buy anything. They just look at it. They play in front of it. They frolic around in front of it. That's what they do. Bullshit. They're buying it all. They're buying the market too. Okay, so with that said, we got trading starts in about 31 minutes from the time I am talking here. Stock futures are slightly higher across the board. 10-year yield, I don't like it. I don't like it here in this environment. Okay, 3.10, but the dollar is slightly weaker. I've covered for many, many years how there is a compensatory mechanism here. Let's say hypothetically, and again, it's not just the number with regard to the 10-year yield, although that does play a role. It's the pace at how fast we're rising. Bond yields are rising, not just here in the United States or the 10-year yield, but around the world. But let's say hypothetically you got a 10-year yield sitting at 3.11. and you have a weaker dollar, it kind of is a compensatory mechanism in the market. And if it settles, let's say here, and we get a weaker dollar, the market's not going to hate that. So look, we have to keep our eyes on a lot of dynamics here. It's not that simple. Crude oil right now catching a bid very slightly. Bitcoin over 21,000, gold and silver catching a bid. And that's pretty much where we stand this morning with regard to the market. And look, I believe the market is waiting to see what the Fed is going to do. Let me also add this into the equation here. We are going to witness a few things happen moving forward that I think are going to take a lot of people by surprise. We're going to see another quarter of negative GDP. Okay, that's a fact. There's no way out of it. We're going to continue to see inflation surge higher, as I just said. We're going to see people being laid off big time moving forward. Inflationary depression. Inflation, it's got nowhere to go but higher, much higher from where we are. I mean, doesn't it make sense to you? Trillions of dollars have been created out of thin air, and they're just floating around this world looking for somewhere to go. They're starting to chase the same amount of goods, something you and I knew would happen from many, many years ago. And now we're starting, we were in the early phases right now of this inflationary depression. And it's going to get worse here, much, much worse. I also believe we're going to see a couple of other phenomenons occur here. So what have we seen? We've seen the Federal Reserve raise the federal funds rate, which is really supposed to control inflation. But guess what? It hasn't done a damn thing. Let me ask you about that real quick before I move forward. So over the last 4 FOMC meetings, the Fed has raised the federal funds rate. And guess what's happened? The cost of living has surged higher. Inflation has not stopped. It's gotten worse. When is the Fed going to be held to account for that? How about never? Exactly. Anyway, so, with this criminal organization here, the Federal Reserve, we have every reason conceivable for our policymakers to get rid of it, but they won't do it. They realize the situation. They understand their role in this entire thing. That is to propagandize the people while the Fed continues to inflate to fulfill its end game, its final solution, which is a massive global depopulation event when the debt bubble bursts. People, what have I shown you? Global debt has risen in tandem with the global population. Global debt bubble bursts, global population falls. Mark my words, that's how it's going to play out. And everybody knows it, you see, but you're not supposed to know that, but you know by following this blog here, that's exactly true. But what the Fed's going to do here, in my opinion, moving forward, is they're going to slow the pace of their nudging the federal funds rate higher. And they may even pause at one point. I know they're saying the polar opposite of that, but that's what I see happening here. And I want to hear from you. Do you believe the Federal Reserve is going to remain, let's say, I don't even want to call it aggressive because it's bullshit, nudging that federal funds rate 75 basis points? So we're going to see a 50 pretty soon. Are we going to see a pause? Of course we are. Of course we are. Whatever they say, expect the polar opposite to happen. And I think you're well aware of that. All right, so look, that's the scenario this morning. I covered a lot with you. Let me know what you think about the rant that I started off this blog with. And I think I'm spot on. I really do. And I want to hear from you. An inflationary depression. Okay, we're in the early phases of it right now. And we have a warning right here, right from Fed President Esther George, warning that unemployment will rise. So we, again, put this together. I'll let you off with this. Cost of living crisis, inflation surging, the Fed admitting that people are going to lose their jobs, employers themselves backing that up. How does that sound to you? Depression, inflationary depression. How about, yeah, that's exactly what it sounds like. All right, look, I'm out of here. Love all of you. See you at the end of the day. It's going to be beautiful.